What is crypto funding? Traditional IPOs. Intro about the different types of funding. Even if the word crowdfunding was coined quite recently, the practice of raising capital to finance a project or a new architectural work has a very long history. Just think of the British National War bonds issued in 1917 by the government in an effort to collect additional funds for the ongoing expenses of the First World War, or of the fundraising organized in 1885 to build a monumental base for the Statue of Liberty in New York City. With the advent of the internet, the process has become much faster and more extensive, becoming one of the most used ways of collecting funds for startups. Although new types of crowdfunding have been introduced to the market recently, the most essential ones are the following four. 1. Donation-based, one of the most popular types of fundraising, in which donors give money to an initiative, business, or individual without expecting anything in return. 2. Reward-based, another common type of crowdfunding, in which donors receive something in exchange for their contributions based on the amount they donate. 3. Equity, a type of funding that is more suitable for small to medium-sized businesses looking for a significant amount of capital to start or expand their business. In exchange for donations, donors receive a percentage ownership in the company. 4. Debt, a fast and easy way for both individuals and businesses to raise the money they need when they need it. In this case, the money that backers have committed in this scenario is a loan that needs to be repaid with interest by a specific date. As the stock market began to gain traction, another type of funding developed, called initial public offering, IPO, which is used by companies to raise capital from public investors through the issuance of public share ownership. What is an IPO? An initial public offering, IPO, is a public offering that involves the sale of company shares to institutional, and usually also ordinary investors. One or more investment banks typically underwrite an IPO and coordinate the shares listing on one or more stock markets. There are two common types of IPOs, a fixed price and a book-building offering. A company can use either type separately or combined. In the former, when a corporation goes public, it sets a predetermined price at which investors can purchase its shares. Before the company goes public, the investors are aware of the share price. In the latter type, during the period for which the IPO is open, bids are collected from investors at various prices, which are above or equal to the floor price. The offer price is determined after the bid closing date. Unlike a fixed price offering, there is no fixed price per share. IPO procedures. When a company decides to go public, it must take several mandatory steps in order to be compliant with the laws of a particular state or administration. Generally, the process takes place like this. 1. The issuing company selects an investment bank, or more than one, which has the task of advising the company on its IPO and taking care of it. 2. To assist the issuing company in selling its initial batch of shares, the investment bank, the underwriter, acts as a broker between the issuing firm and the investing public. The bank is required to perform due diligence and regulatory filings. 3. After the IPO is approved by the regulator, the date to launch the IPO is chosen. Before the effective date, the issuing company and the underwriter decide the offer price and the precise number of shares to be sold. 4. After the issue has been brought to the market, there is a stabilization period, during which the underwriter tries to make sure that the trading price of a company's shares does not fall below its IPO price. 5. After this stage, the earnings and value of the issuing firm can be estimated by underwriters. The transition from a private to a public company is very important, as it represents a big step forward for their business. Following an IPO, the issuing company is publicly listed on a reputable stock market, which is considered by many to be a good sign of growth. However, there are several disadvantages connected to completing an IPO, including significant legal, accounting, and marketing expenses, which leads some companies to abandon the idea of going public. Crypto funding. Types of funding using cryptocurrencies. With the rise of blockchain technology and cryptocurrencies, new scenarios have opened up in the world of fundraising. Thanks to some of the characteristics of blockchain technology, such as decentralization, in some cases, transparency, and the high speed of finalizing transactions, companies can raise capital more and more efficiently, while cutting the costs of fundraising. As we have seen previously, raising capital in the traditional way is not for everyone. The steps to complete it are too many, expensive, and slow. Blockchain, playing the role of a distributed and immutable ledger, acts as an intermediary in the exchange relationships. Therefore, by eliminating the third party, it is able to not only streamline and speed up the exchange processes, but also cut down their costs. Nowadays, there are different types of crypto funding that are characterized by the types of services offered and/or their operating methods. The main ones are essentially three. 1. ICO. It used to be one of the main types of funding using cryptocurrencies. ICO stands for Initial Coin Offering, and allows a crypto company or project to raise capital from investors in exchange for their platform's native coin/token, which is distributed upon project launch. This token may have some utility related to the service that the company is offering or represent a stake in the company or project. 2. STO. Even if it is not widely used yet, it has a lot of potentials to become mainstream. STO stands for Security Token Offering, and allows a crypto company to tokenize its shares, i.e., to represent a share in the form of a digital asset, a blockchain token. 3. IEO. It is considered to be a little more advanced form of ICO. IEO stands for Initial Exchange Offering, and allows a crypto company/project to raise capital from investors through selected cryptocurrency exchanges. It is easy to understand how this method is more effective than an ICO, as any investor with access to the selected exchange is able to take part in the funding. Other types of crypto funding that are gaining traction are IDOs and IGOs, which we will discuss later. History of crypto fundings. Fundraising in the cryptocurrency industry took off in 2017 with the so-called ICO mania. With ICOs, many projects went live, while others failed miserably, both due to mismanagement of funds and lack of use cases, the latter also aggravated by fierce competition. The rest of the ICOs turned out to be pure scams, some say 80% of the total, and in many cases, the developers of a given project literally disappeared after raising large sums of capital from users. Due to the worrying situation that was developed around the world of ICOs, there has been the creation of a new form of crypto funding, precisely to prevent other users from running into scams. ICOs were catching the attention of global financial regulators. Therefore, new methods of funding emerged, such as registering your project as a security with their jurisdiction's financial regulator, or getting help from a large crypto operator to list the project, thus making it available for buying and selling to users of the listing platform, which is usually a crypto exchange. Nowadays, STOs and IOs are the most innovative fundraising methods, while others are gaining attention from crypto users more slowly. Highlights. A popular form of financing known as an initial public offering, IPO, allows businesses to raise money from general public investors by issuing public share ownership. This practice emerged as the stock market started to take off. The process for making an IPO is very long and expensive, as it requires following precise rules dictated by the regulator, which often turn out to be stringent and difficult to interpret. Many companies give up on it. With the rise of blockchain and cryptocurrencies, other forms of raising capital have developed, which are much easier and more affordable in comparison to IPOs. However, these are not free from risks and problems. Conclusion. This part of the course is intended to help you understand how more innovative forms of funding came about, especially for startups, and how much there is still potential for improvement. In the next module, we are going to analyze ICOs and talk about the differences between them and IPOs. Asterisk crypto investment involves significant risks. Please proceed with caution. The course is not intended as investment advice. Asterisk, the course is created by the author who has joined GateLearn. Any opinion shared by the author does not represent GateLearn.